And now the ECB preview. Here is Mario Draghi. In one picture he's smiling, in the other one he's frowning. He is known as the magician, Mario the magician. The Draghi show that drags the euro down. You never know what's going on with him. And he lost some of his magic earlier in the year, but now kept his cards close to his chest, raising the tension and the speculation. So, what's going on in Europe? Some background. Inflation remains low, 0.6 on headline inflation, which is a bit too low, despite stabilization oil prices. Core inflation is even more frustrating, not budging from 0.8. Growth is slow at 0.3. At least we have some growth in Europe and not a contraction. When Draghi entered his job, it was the second recession of 2011, 2012. Unemployment is falling. That's a genuine piece of good news. It fell under 10% in the wider scheme of things. And even in Spain, it dropped under 20%. Italian banks are in trouble, especially after the referendum in Italy. His compatriot Renzi is down but not out. Anyway, we'll surely get questions about that. And the Eurozone can withstand lower exchange rate. Okay, so currently at 107, 108, even parity is a level which still helps exports, of course, and doesn't push inflation too high. In the UK, we had inflation. We had the pound falling too fast, triggering higher inflation and a change of mind from the Bank of England, which moved to a neutral stance. Okay, anyway, the background for this meeting is that Draghi promised us details about the QE program. This is an important decision. It's not like October, and September was also important, but in September he kept us in suspense, promising action now in December. The big question is the QE program, quantitative easing, or in other words, printing money, as you can see here. The program is currently running, well, it's running since March 2015. It was enlarged in March 2016, and currently stands at 80 billion euros per month. It ends officially, was extended from September 2016, and is expected to end in March 2017. We're getting closer to March. The ECB is currently buying mostly government bonds, sovereign bonds, but also some kind of corporate bonds. The program has two key limits. It has quite a few others, but let's focus on these ones. The ECB limits itself according to the country's GDPs. That means it cannot buy all of Greece's debt and buy less of Germany's debt, and has more limits here. And so it has to buy according to each country's GDP. It also depends on the issuer, on the issuance, and they cannot buy bonds which have a yield under 0.40. Bonds which have a yield under the ECB's negative deposit rate. Okay, these are the self-imposed limits of the ECB. What are what are the options standing before the governing council of this Frankfurt-based institution? The baseline scenario is extend the program, continue it in its current pace up to September 2017. That means repeat what they did in the past, add another 6 months. That's the baseline scenario. That's basically priced in. It should not move the euro too much if this happens. The euro should not move too much if this happens. Another option is begin tapering it down in March, moving it down from 80 to 70 to 60 to 50, doing what the Fed did with its own QE program, QE3 or QE Infinity. That would be euro positive because it's not, of course, it's not priced in, and it would mean less printing of euros and a higher value for the common currency. The other side of this, the other scenarios, is the extending the program by 12 months or even more to infinity, saying we'll buy as much as needed and we'll let you know when we intend to stop it, taper it down. That'll be, of course, euro negative. Even 12 months extending it to March 2018 will be negative. And they can also do other things like loosen their self-imposed rules. I don't see it as quite likely because yields have risen. One of the advantages the ECB has at the moment is that thanks to the bond route, as some people call it, the sell-off of bonds, mostly US bonds, but also other places, yields have gone up. Higher yields mean there's less scarcity. Scarcity has been a problem in many press conferences. Draghi has been asked about it. So the ECB can continue buying bonds at has enough stock of bonds to buy in, so it won't need to loosen the rules. Okay, so with more bonds available for buying, with weak inflation, I expect them to add more stimulus. That means at least extend the QE program by 6 months. Other things to watch out for in the hour-long press conference. We have in December, as in March, June, and September, we have new forecasts for inflation and for growth. If it's of course more pessimistic about inflation, about growth, then it's of course negative for the euro. If it's more optimistic, it can imply tapering, ending QE, and it's good for the euro. And the question is also the tone, not only the forecast, the numbers, but also the tone. Is Draghi more pessimistic or more optimistic? He might be a bit more optimistic as we're entering the holiday season, but you really never know. He's going to get bombarded probably with political questions about the implications of Brexit, the implications of the referendum. Here's a picture of his compatriot Matteo Renzi. There are lots of elections going on in the Eurozone next year. France, the Netherlands, and Germany, of course, stand out. There will be also questions about if the ECB's policy has reached an end, if there's nothing else to throw to lift inflation, and of course Draghi is going to deny it. No central bank wants to admit that they're out of ammunition. And of course he'll call on governments to do more fiscal stimulus. The European Commission has moved in this direction, but the ones that really call the shots, that means the ones that really call the shots, Wolfgang Schäuble, the German finance minister, Angela Merkel, they are not really changing their minds about austerity, at least not now, maybe towards the elections in Germany. Okay, so let's conclude this segment. Basically, a 6-month extension is priced in. Should not have a big impact. 12 months will be negative for the euro. Tapering, of course, ending it in March will be positive. Anyway, if it's a 6-month extension, the tone and the forecasts will matter quite a lot for the next moves in euro dollar. There's also something to mention here, a low probability that they'll push back the decision to January. I'll mention that the initial QA announcement was made in January 2015 without new forecasts, but they hinted about it heavily in December. I don't see them postponing it to January. I see Draghi announcing something right now.